Welcome everyone to Vested Interest. This is Shane back for another Stock Pick of the Day video. Today we're going to take a look at Pepsico. This is out of the consumer staples sector. It is June 10th. Let's jump right in. Before we get too far into the video, if you could take a moment and hit that thumbs up button down below if you find any value in the content. If you are a dividend growth investor or investor in general, make sure you hit that subscribe button. Join us on this journey to financial freedom. Join the Vested Interest community. Make sure you hit that notification bell so you're notified whenever we put out any new content. Share the videos with anyone you think that might find value in the content. And drop a comment. Let me know what you think of the video. Let me know what you think of PepsiCo. Now this is the vested interest stock screener. This is how I set up the video. So we're going to run through this screener at the end. We'll see if it meets 5 of 8. This is not a bank. For banks or financial companies like insurance companies, we'll use price to book, 1 being fair value, anything under 1 being undervalued, anything over 1 being overvalued. Now you can use price to book for any company, but if it's not a financial company like a bank or insurance company, you should compare it to other companies in the same sector. The 1 being fair value doesn't necessarily apply to all companies. Some companies have a higher price to book as compared to their peers is what you really want to look like for other companies, like companies in the industrial sector or companies in the internet information technology sector. You'd want to compare their price to book to other companies, similar companies in that same sector, in that same kind of vein of business that they do. Now, jumping back over to PepsiCo, you can check them out at www.pepsico.com. That's www.pepsico.com. That is their homepage where I pulled this information from. They are a global leader in convenient foods and beverages. PepsiCo products are enjoyed by consumers more than 1 billion times a day. I don't know how they figure that out. I guess they're just assuming based on how often people buy them that they're also eating them that same day. But that seems like an awful strange claim to make. I'm not sure how you know what people are eating on a daily basis, but more than 1 billion times a day in more than 200 countries and territories around the world. PepsiCo generated more than 91 billion in net revenue in 2023, driven by a complementary beverage and convenient foods portfolio that includes Lay's, Doritos, Cheetos, Gatorade, Pepsi-Cola, Mountain Dew, Quaker, and SodaStream. PepsiCo's product portfolio includes a wide range of enjoyable foods and beverages, including many iconic brands that generate more than 1 billion each in estimated annual retail sales. And again, you probably are well aware of those brands, Quaker Oats, Gatorade, Tostitos, both the chips and the salsa, Doritos, obviously Pepsi, Mountain Dew, Lay's, Ruffles, Cheetos, Rolled Gold pretzels, Sabra, hummus, Frito-Lay's, the teas, Lipton tea brands. So again, you probably have some of these either in your fridge or in your cupboard at home, and whether you realize it or not, they fall underneath the PepsiCo brand, whether it's the drinks or the snacks. I don't know that there's many households out there around the United States or in many other countries, again, have their footprint in over 200 countries, or so a lot of cupboards and a lot of fridges are holding their brands. And just $1 billion brand, that's a pretty good size company at that, even if you were to split off each one of these into their own company, a standalone company, that would be a pretty good sized company. Now, the reason we're taking a look at them, down at 3.01% on the day. We are talking about PepsiCo Incorporated, ticker PEP, again out of the consumer staples sector. Closed out the day at $165.90. You can see that big drop off here, pretty much a sell off after, about 9:30 a.m., right? As the market opened. This would have been pre-market. This would have been as the market opened right around 9:30, and just a big drop off. 52-week range as low as $155.83, as high as $192.38. Now, they are not right up against their 52-week low, but they are within 15% of their 52-week low. I think it's at 178. I did the math here a minute ago. Let me see if I still have that calculator up. 150. Let's just look at it. 165. 155.83 times 1.15. Yeah, 179. So as long as they're 179 and 20 cents, $179.20 or lower, they'd be within 15% of their 52-week low. This is not one in my portfolio. Market cap of $228.078 billion. So large cap company here. A beta of 0.53. So even though they had a 3% drop today, typically they are much less volatile than the overall market, 1 being the market. So 0.53 is about half of the volatility of the overall market. PE ratio, price to earnings at $24.98 per share. Seems a little high, but this company always seems to trade at a high PE. Coca-Cola is another one that does similarly. You're buying the brand name, and this one, obviously, you want to get it as cheap as possible, so you might wait and see if it's going to continue to drop back closer to this 52-week low. But again, I would not, some companies you're just going to pay a higher premium for because of the brand, right? Everyone knows Pepsi, everyone knows Coca-Cola. It's the brand name, so a lot of people want to flood to these type of companies whenever we're having issues because they know people are going to continue to buy the brand names, especially snack companies. Even if you're having trouble financially, you might still buy a bag of chips and a soda. Earnings per share, EPS sitting at $6.64. Earnings date is coming up July 11th through July 15th. Sometime in there, that little window, they will announce. Forward dividend is $5.42 with a 3.17% dividend yield. Nice starting dividend yield on this one. Ex-dividend date, June 7th. So that we're just past the June 7th. When are they going to pay out? Going to pay out here at the end of the month. So you would not be in line for the June 28th dividend payout. If you were to buy them now, you'd have to wait several months to get that, right? That will be the next one that they pay out. They'll pay out in September again. So you would not be in line for the next payout if you were to buy them now. We're just past the ex-dividend date. 1-year estimated target price of $187.98 per share, at least according to Yahoo Finance, where I pulled this information from. I am not affiliated with Yahoo Finance. It's just one of the sources that I go to for information. So we're going to check out dividend yield theory. To do that, we take a look at their 5-year dividend yield average, 2.74%. We compare it to its current 3.17%. These numbers are inversely correlated. So what that means is if the number is higher, which it is, their current is higher than their 5-year average, that speaks to undervaluation, at least according to dividend yield theory. If this number happened to be lower than their 5-year average, then it would speak to overvaluation. So right now, at least according to dividend yield theory, they are potentially undervalued. Now, payout ratio is a little higher than I like at 76.2%. We'll see here with stockanalysis.com. They have them in the 81 range, I believe. We'll see that here in a minute. But either way, both would be above the 75% or lower that I look for. So it is a little on the high side. Same thing, I am a little concerned whenever companies start getting over 75%. That is the dividend safe? Are they able to reinvest back into the company? Are they able to grow, expand their business? Now, a company like this one being pretty well built out, I don't know that there's as much concern with that, but it is something to keep in mind, and that's why I set my high mark at 75%, and I want something at 75% or lower. So this is a little above what I want. Let's take a look at free cash flow, see if it's growing over time. We're going to jump back to 2020 here. $6.3 billion in free cash flow, 2021 up to $6.9 billion. Now, it looks like a drop in 2022, but we'll talk about that here in a minute. $5.6 billion, and 2023 at $7.9 billion. Now, I call this growing free cash flow, a nice, pretty steady growing free cash flow at that. And the reason I say that is because if you look here in 2020, compared to 2021, yes, they had $6.9 billion in free cash flow, and then what looks like a drop down to $5.6 billion. But if you look at this one above it, the repurchase of shares, they went from $106 million to up to $1.5 billion in repurchase of shares. So that more than accounts for the drop in free cash flow. What they did with that free cash flow is they bought back more shares, and they're continuing to buy shares. I like that they are continuing to buy shares back. Very nice to see. So growing free cash flow over time. So far, all the numbers look pretty good. Well, except for the dividend yield being over 75%. Now, according to the 11 analysts that have taken a look at this, they call it a consensus buy. They have a low estimate of $170. It currently sits lower than their lowest estimate, so that would be a 2.45% increase in the stock price if it came back up to their low estimate. Average estimate of $189.45, which would be a 14.17% increase from where it currently sits. And if it happened to hit their high of $211, that would be a 27.16% increase. And all the while, you could collect that 3+% dividend yield, at least if you were to buy them now. Now, we're going to jump into the statistics here and look at return on equity and return on invested capital and see how well this company is reinvesting back into itself. And I like 10% or better. Return on equity sitting at 49.6%, very high, very good number here. Return on invested capital sitting at 14.96, same thing, it's above the 10% I'm looking for. So very good numbers overall. EPS growth forecasted over the next 5 years. I like 5% forecasted growth or better. They're sitting at 10.62, so that's more than double what I'm looking for, with revenue growth forecasted over the next 5 years at 4.77%. Again, very good numbers overall, very sticky business. Again, a lot of people, even in downturns, whenever we have financial difficulties in the United States, they're still going to be buying snacks, still going to be buying chips for your kids, sodas, that sort of thing, right? They're the feel-good type of snacks. That's what they're selling. Now we're going to jump and look at their dividend history. They are a quarterly payer. Again, their payout ratio says 81.5 at stockanalysis.com. Yahoo Finance had them in the 76 range. Either way, over the 75% I'm looking for. Now their dividend growth is very high. Not quite double digits, but pretty close, 9.23%. Very nice dividend growth. But again, can they maintain that with such a high payout ratio? 52 years of dividend growth, very nice. So they're a dividend king. If not, they're actually a dividend aristocrat, I believe. Buyback yield of 0.29%, so they're doing well buying back their own shares, and shareholder yield of 3.54%. Very good numbers overall. Now, they do pay out on the January, March, June, September time frame, which is a little odd. March is usually not mixed in with the January payout, but that's a little different payout timeline than a lot of companies I've seen. Going back to December 2nd, 2021, they were paying $1.07 and a fraction of a penny here. Jumped it up in June 2022 to $1.15. Jumped it up again June 2023 to $1.26. And it looks like the next payout that they're going to have is another increase at $1.35 and a fraction of a penny. So kudos to those of you who have been holding this one for a while. You just got a dividend raise, or you're going to get a dividend raise here when they make that payout on June 28th. Very good numbers overall. This one, let's see how it does on the stock screener here. Here's the screener, right? We started with understand the business, took a look at that, and again, check them out at their homepage if you want to know more. So that's a check. Growing free cash flow, that was a check. Growing dividend, yes, almost double digits. Now, dividend payout ratio of 75% or less. They did not make that. They're just over according to Yahoo Finance and at 81 according to stockanalysis.com. So either one you look at, they're over 75%. I'm looking for. Dividend yield theory says they're potentially undervalued. It is within 15% of their 52-week low. It is not in my portfolio, so the under my cost basis doesn't apply. Return on invested capital, return on equity is 10% or better for both. And very good return on equity, almost 50% return on equity. That's very, very high numbers. Earnings per share growth is better than 5%. They were projecting at 10%. We didn't look at price to book. So 1, 2, 3, 4, 5, 6, 7. That's almost as good as you can get. 7 of 8. So this one would make it on my watch list. Might be a good one to take a look at right now. It is under its 15% of its 52-week low, or within 15% of its 52-week low. And it looks like with the drop today, might be one to take a look at. Well, as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community and drop a comment down below. Let me know what you think of PepsiCo. Is it in your portfolio? Do you have some of their products in your cupboard? Are you surprised with some of the products that are underneath their brand that maybe you didn't know about? I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like PepsiCo you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it down below, and I'll try to work it into the rotation over the next couple of weeks when the company pulls back. With that said, this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk and can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and selected criteria, or seek the advice and counsel of a certified financial advisor.